With just 2 weeks to the US elections, President Barack Obama and Republican presidential nominee Mitt Romney went on the attack after their final debate.
If you've come down with a case of amnesia, if you can't seem to remember the policies on your website,
attacks on me are not an agenda. And we haven't heard an agenda from the president, and that's why his campaign is taking on water and our campaign is full speed ahead.
According to the latest Reuters Ipsos tracking poll, Obama currently leads Romney by just 1 point. Other headlines this morning: Greece gets some breathing space. The Eurozone states will give Athens 2 more years to bring its budget deficit to within agreed targets. That's according to Germany's Süddeutsche Zeitung paper, without citing sources. This means that Athens will now have until 2016 to bring its deficit to within 3% of GDP. European Central Bank President Mario Draghi is set to defend his bond buying plan later today. He faces a 2-hour grilling from German lawmakers who are afraid his plan could stoke inflation and undermine the ECB's independence. And in the UK, Bank of England Governor Mervyn King warns the economy will remain weak until banks have accepted they have to write off bad debts. King also said that the bank was ready to inject more cash into the economy should recent positive signs fade. Let's get more on that story. Here to discuss is Jessica Ground, UK Fund Manager at Schroders. Jessica, very good morning to you. Thanks for joining us this morning. Mervyn King warning about these banks. They have to basically write off all of this bad debt before we can move forward. Is that something you agree with?
Well, it's certainly something we've been hearing a lot about. It's not only been Mervyn King who's been saying this over recent weeks, but Andrew Bailey, another very influential policymaker at the Bank of England. I think what we as investors find very frustrating is they're saying this, but they're not really being specific about the areas that they're really concerned about. Is it Europe? Is it sort of UK secondary real estate? You know, we've had 4 years of the crisis now. Banks have written off huge amounts. At the likes of Lloyds or Royal Bank, you've sort of halved the amount of non-core assets that you have that you're really worried about. And policymakers are saying there's still a problem. So, you know, are they questioning auditors? Are they questioning the FSA and how they've been regulating things? It'd be nice to have a few more specifics to get our teeth into instead of this headline.
Now, I understand Schroders is already investing in some of the banks, but at what stage do you put more money into the banks on the assumption that the worst is over?
I think what we'd like to see, obviously, you know, our expectation is that the recovery is weak as we're feeling now. I think we would like more clarity on the regulatory front. You know, what is going to be, you know, the ring fence, what is it really going to look like, how high, but also what kind of returns are the banks going to look at in the future. So while we can get comfortable about their existing assets, we need to know that they're going to be able to earn decent returns in the future to be able to add more to holdings.
I want to move on to China, if I may, in talking about the PMIs, which we'll give details of it in just a moment. But in terms of the miners, the resource companies, 7% growth plus PMIs improving a little bit. Is that enough to attract you to these companies?
Well, I hope so. I mean, a lot of the miners now, they're trading on relatively low Ps relative to their history. Expectations have really come down about the prices of the underlying commodities. And unlike the last time price of commodities came down in the financial crisis, the balance sheets in these companies are in much better shape. So I definitely think that, you know, at the quality end of the spectrum, when you're already a low-cost producer, that we are very encouraged by, you know, not only this news from China, but some of the more recent macro news we've had, that maybe things are starting to look up there.
And what about the tech side of things? We heard from Arm Holdings yesterday, SAP over in Germany today. We've just done an interview with them. Is tech one of the spaces to be, if you can find it?
Well, I think that the interesting thing about tech is, and you see it with Arm and with Apple results, that consumers are very happy to sort of buy the latest gadget and they think it improves their life, and that's come through in the volume numbers. I guess the problem is we're just sometimes a bit concerned about some of the valuations of these, and they're pretty pricey companies on pretty high PEs. So it's just trying to balance the risks and the rewards.
OK, Jessica, thank you very much indeed for that. Jessica Ground there at Schroders. Now, over in Asia, signs of recovery from China, as we were just mentioning. A survey of purchasing managers out today showing the world's most populous nation is now making a slow recovery from its weakest period of growth in 3 years. Let's get out to Reuters' Lisa Yuriko-Thomas. Lisa, good morning to you. Thanks for joining us once again. How are stock markets reacting to that news?
Well, it's good news ahead of a key leadership change in just a few weeks. The flash PMI for October coming in at a 3-month high. While it's still a contraction, it is a clear signal that the economy is picking up. The index also showing an improvement in new orders and output. As you can imagine, Asian equity markets reacting positively, halting an earlier slide. And of course, the Aussie dollar jumping higher. But Chinese manufacturers are not out of the woods just yet. We have European worries and ongoing external pressures. Nigel?
We're also hearing about a shift in attitude by Japanese companies towards investing in China. Tell us more about that.
Right. Well, Chinese and Japanese tensions taking a toll on their business ties. Reuters company survey released today showing a quarter of Japanese manufacturers are rethinking their investment plans in China. This follows the dispute over the islands in the East China Seas. And this is a big shift for Japanese companies who have been a big source of FDI in China over the last 2 decades. Analysts say low margin businesses will probably see a shift first. These include clothing and electronics manufacturers. They might look to Southeast Asia instead for new investment plans. But those companies focused on the China market, like auto manufacturers, they may just have to stay put and hope that the tensions subside.
Okay, Lisa, thank you very much indeed for that. Now, earnings season in full swing here in Europe, as we mentioned. Germany's SAP has hiked its full-year revenue targets thanks to strong software sales and its Ariba acquisition. Catch our interview with the group's co-CEO Bill McDermott on the Insider platform and Reuters.com. Peugeot Citroën is seeking €11.5 billion in refinancing for its struggling car loans division. That's after posting a 3.9% fall in third-quarter sales. The world's third largest brewer, Heineken, posting a stronger than expected rise in third-quarter revenues. Fresh from its battle to take control of Tiger Beer, the group said it sold more beer in the Americas, Eastern Europe and Africa. Now, also today, the fallen Wall Street titan Rajat Gupta is due to be sentenced for an insider trading case. Instead of going to prison, Gupta's lawyers are asking that he be sent to Rwanda to do charity work. The ex-Goldman Sachs director was convicted in June of leaking boardroom secrets to hedge fund manager Raj Rajaratnam at the peak of the financial crisis. And the man behind France's biggest rogue trading scandal also facing sentencing today. Jérôme Kerviel will find out if he will go to jail for his role in taking huge bets that cost Société Générale almost €5 billion to unwind or walk scot-free. Kerviel said his bosses always knew what he was doing, which SocGen denies. Well, that's it for now. I'm Nigel Stevenson. This is Reuters.